Hey everyone, so I want to discuss raising money versus going solo. Raising money for an acquisition, I don't actually like it. Okay. I think it incentivizes you to make a deal fast because you've got pressure from investors to get a return. There's expectations of success as well from those outside investors and like the expectations on the direction that you take as well. If you feel like you want to go one way and you have investors trying to get you to go another way, there's just expectations around success, the direction. You've got to report to these investors. So you're going to have meetings with them as well. So that's going to be something that, are you really sure you want to do that? You're the one who's taking all the risk here. An investor has other investments to deal with and other things going on in their life. But if this is what you're pouring your heart and your energy into, like, do you really want to report to investors? You can get, obviously you just got to be really picky with the type of investors you're getting, but the stories from even like all the serial acquirers in that world as well, they don't have it as easy as you think with their investors too. Like there are private equity funds that have invested in them and people who have helped them out in, if they've got into too much debt or they just were raising money to go after a bigger acquisition or something like that. They get into trouble with the people they go into business with, and that's what it is. You're going into a partnership with these investors, and do they have the exact same idea and alignment as you? That's hard. That's hard. And things change. People change. So look, I'm not super keen on getting investors involved, not in the short to medium term anyway. I can understand it a little bit like IPOing, where you've got like shareholders in a public equity where you maintain majority, and you've still got to report though, and you've still got all this like, I don't know. There's a lot of things you have to do when you have other people involved. So, and obviously the big thing is you're going to have less ownership overall. It's not going to be 100%. And if you've raised a lot of money, which a lot of people do, you're not going to have as much ownership, and you're not going to have, like, you might not even be in control anymore. And don't get me wrong, there's some pretty interesting positives around raising money. So the first thing is, especially in this search world, you can actually raise money without having made the acquisition yet or having a business. You can then just pay yourself to do the search, which for a lot of people who have families or mortgages and things like that, that might be the only option you have, it's like raising money. You pay yourself $100,000 a year, and it might take you a year or two to make the acquisition. Yeah, you're going to have the expectations and the pressures from your investors to make that acquisition, but in the meantime, you can pay yourself, pay your bills. So I can see the appeal to that pretty significantly. I can't believe that's even allowed. I can't believe that you can raise money and pay yourself without even having a business, and with the promise that you're going to find a business. And what if you don't find a business? Does that mean the people who have raised the money, they're just going to be out of pocket a couple of $100,000? That's apparently how this works. That blows my mind, but yeah, that sounds crazy to me. But all right, I can see why that could be a benefit to a lot of people. I also see another positive is that if you have these experienced investors who have done maybe this quite a few times before, you can bounce ideas off with them. So you kind of get that experienced investor advisor part of your team. And part of that is you can leverage their network, and maybe that helps you hire an amazing CEO or opens up some doors to debt financing that you wouldn't be able to do on your own. And I can see that you can leverage your investors in many different ways. So there's some pretty big positives there. You can also go after bigger businesses, and I think that's very attractive. Where you can already have a layer of management. Maybe you're buying a business for a few mil and it's turning, I don't know, maybe it's doing $1 million in EBITDA per year or something like that. And you've got 3 or 4 people who are strategic layers of management. You've got operations people in there. And so maybe what you have to go in and do is not very significant. So I think that's a very interesting way to go about this as well, as if you do raise money, you can go chase that bigger fish. And I guess that then frees you up to potentially go and make acquisition number 2 with money that you have from the raise and maybe some of the free cash flow that's generated from that business. And maybe you can leverage some of the assets in that first business and go out and make acquisition number 2 far quicker than you'd be able to do if you were going solo. So even though those are some pretty good positives, I'm still going to do this solo. And I'm doing it solo because I don't want the added pressure. I think it's going to be harder without the support. I think it's also going to be kind of lonely doing this alone. And I'll obviously be having to focus in on fast, smaller businesses because I don't have millions of dollars to do this acquisition. But I am going to have 100% control, and I don't have to please anybody else. And I think I'm weighing that as more important to me. And yeah, I'm going to move slower because It's going to take me time to learn, and going after the second acquisition and the third acquisition is going to take a bit more time to build up my cash flow and my reserves. And maybe I do go get some bank financing, but the business and me as an owner of that business are going to have to prove ourselves so we can get financing. Essentially building this from a pretty low base is sort of how I'm going to approach this. So whether that's the right or wrong way, I don't think it really matters. It's just what appeals to me and what feels comfortable for me. And I'm weighing the fact that I don't want to report to people and I just want to be 100% owner and keep things really simple. I'm weighing that as far more important than going fast and going big quickly. And if I make a catastrophic failure, I've always got my savings, which is all in Interactive Brokers, there's a link in the description below for that. That's what I'm using essentially as my backup, my safety net, my savings plan, whatever. And yeah, Interactive Brokers to invest in the companies that I think are probably far better than the one that I'm going to buy initially. And that's okay. And that's how I'm structuring things. And yeah, anyway, I hope you've enjoyed this video. I will see you in the next one.